So YCC is yield curve control, right? Do you
Hmm.
mind like giving a basic definition of it?
I will give, but I think Jatin will give me a go right now. So we will
Okay,
come
okay,
to that point. Yeah.
okay, okay. Uh,
Yeah. So hey guys, welcome back to the Tradfi and Bitcoin Club. So today we will look into Bitbonds and why it might turn out to be a masterstroke for the US government. So before going into um, Bitbonds directly, I want you guys to know what's currently going for. Uh, why is this idea more feasible now? So I want to take you through that. So this is a chart which explains, like, blue line is US Treasuries 10-year yield, and red line is Chinese Treasury 10-year yield. So this is, I mean, is a this is counterintuitive for many of us, because US Treasuries are looked as a safe haven asset. So whenever there is chaos in markets, people fly to safety. So, but currently, what this is suggesting is, to invest in US Treasuries, people are demanding a rate of 4.5%. But to invest in Chinese Treasuries, they are demanding a rate of 1.6%. So what this says is that people think currently Chinese yields are much safer as compared to uh, Chinese treasuries are much safer as compared to US treasuries. So this is the thing currently in the market. Yeah. So what Luke Groman says here is 10-year. Yeah. In a trade war, the trade debtor should see yields go up, while trade creditor should see yields go down. And that's exactly what's happening. If US wants to win the trade war, 10-year USTs will need Powell to get down with YCC. Yeah, you know me. So YCC means yield curve control. So what he's hinting, by YCC, he wants Powell to intervene and start buying US Treasuries. Like, Fed should start buying US Treasuries, which will shoot up the demand for US Treasuries, and eventually, push down the yields for the Treasuries. So this will again make US Treasuries to go from 4.5% to nearly where China is able to raise currently. So this is a even much bigger problem currently for US, because they have to finance, I think, $6 trillion in next. Yeah,
So the
my
yield,
screen is visible, right?
yeah,
yes, yes.
Yes.
Yeah,
so the
Manu.
yield, can you briefly define what is an yield curve?
So yield curve is this. This is the yield curve, blue line. So
Uh,
what he means by
uh,
yield curve control, he will do one thing, like cut the interest rates down. So this will push US Treasuries down and start buying US government's bond. So
yeah,
this thing, yeah,
usually it is a plot at any given point of time, where in the x-axis you have different tenures of yields. It starts from like
yeah,
2 months, 1 year, 2 year, 3 year, and it goes all the way up to 30 years. So that is the maximum tenure bond that is there available. And on the
yeah,
y-axis you have the rates. So normally the yield should be a line or something that slopes upwards. So you'll get the lowest yield at the shortest tenure and the highest yield at the longest tenure or duration. So that's the yield curve. What do they mean by yield curve control is that when these kinds of when these kinds of volatility occurs, the yield curve will not be will not be sloping upwards. So there will be some changes. There will be some changes happening in the yield curve shape. Uh, when they mean what do they mean by yield curve control is that Fed will get into the market and start buying different different tenured treasuries at along the yield curve so that it tries to maintain that that upward sloping yield curve to the right. So that is the ideal yield curve. And when these kinds of volatility occurs, that gets distorted. And in order to maintain these things, Fed will intervene and they will buy at different places so that they can keep the shape of the yield curve the way they want to.
Yeah.
Yeah. Thanks,
Why
So,
the
Bala.
Bala,
getting
Quick,
distorted?
yeah, Shreyan, go on.
yeah, quick question. So they want to ideally, I think, maintain the yield curve control to be flat. Would that be correct? Just a stable yield curve, or does that
No,
differ?
the shortest tenure, like 2 months, 3 months, will give you the lowest yield, maybe close to 1% or 2%. And as we go along the tenure, like say 30 years, you will get in this. We can see that right now the 10 years yield is 4.5. 30 year will be somewhere around 4.8, 4.9, close to 5. So that will be the yield curve. It will be like start from left to right. It will climb. So that will be the ideal yield curve,
Hmm.
and that
Okay.
is the ideal shape that the Fed and the government wants to maintain. If there is volatility or trade war, something happening, this shape will get distorted. It is also a predictor of recessions, and it conveys a lot of macroeconomic information.
Right. Yep. Thank you.
So, Bala, currently, what are the short-term rates? I mean, they are higher than 10-year or lower?
No, that is called yield curve inversion. So that was
Inversion,
there.
yeah.
Yeah, was there sometime ago.
Okay.
Uh, it is more or less the normal curve. I'll try to get
Hmm.
the curve and post it directly.
Okay. Okay. So, should we move forward?
In here, there are two charts: 10-year USD and 10-year CGB. So, what do these two different terms mean? Which the blue one is the yield curve, you said. What is the CGB?
No, no. Blue one is the US Treasury, 10-year US Treasury is, I mean, the chart, and the red
Okay.
one is China's 10-year chart. So currently, the case is like China is able to raise 10-year, I mean, Chinese yields are low. So this means that currently China's bonds are much safer as compared to US 10-year bonds.
It's also because China has capital controls and China can direct its own fund to get into, as in China can direct PBOC to buy its own treasuries, right? Also, like inflation in China is 3%. So 1.65% is a reasonable number as compared to US's inflation, which is like 9%, 8%. And so, of course, like anyone would expect higher coupon rate. Is that not correct explanation?
Uh, I want Bala to come in here because Bala would be the right person, I think.
Yeah, sorry, I didn't get the questions. Can you?
So the question was like initially the question was what are these red lines? And I understood that these red lines are Chinese 10-year treasury bond yield,
Yeah,
and
yeah, yeah.
this is this is the rate of interest at which China is able to raise 10-year treasuries.
Yeah,
So
yeah.
my understanding is China has capital controls, which means that China is directing PBOC or like there might be people inside China who are buying these treasuries, or
Yes,
is
yes.
the demand coming from global market? And if it is coming from inside, then it's China directing them to purchase the treasuries, right? And also, like, because the inflation in China is super low, has always been super low, it makes sense for them to have lower interest rate on their lower yield on their treasuries.
Yeah, you are right. Most of the Chinese yield curve data we cannot rely because we don't know who is buying and who is selling the bonds. One thing is that, like, particularly after this trade war stuff, like after the Fed started, like after COVID, when Fed started raising rates, that's when there is the secular rise in the US 10-year yield. So by that time, after COVID, Chinese economy also is facing a lot of problems. Like they have a severe real estate deflation happening there. So there is no way for them to no way for their rates even manipulated to rise. So it is like there are multiple factors that is dictating their rates to go down.
Okay. So, does it make sense for US to, to cut rates and like what China is able to raise at 1.65? So, as you can see, till 2022, US was able to raise below China's, but now
Yeah.
China is able to raise below US. So, will US try and push below this, or they will continue to just stabilize the yield curve from right to left? Sorry, from left to right.
For the US, it makes sense to bring the 10-year somewhere close to 2 or 2.5. That's what their ballpark figure is. So they are not their priority with respect to the yield curve is to bring it to a rate which will reduce or keep the deficits manageable. But that is their priority, and right now bringing the curve below China's curve is not a priority for them. Literally don't look at what China's rate is doing right now. So all that they want is to 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 roll their debts at a reasonable rate. So that's their focus right now.
Okay. And even as as Saurabh said, there are capital controls. So governments would not be comfortable to invest in uh, Chinese treasuries because,
Yeah,
opaque environment as compared to the US.
yeah.
Okay.
Just one follow-up question. So you are saying 10-year treasuries yield is 4.497%. When we say like US has a lot of debt and US has to pay back all that debt, is that basically the yield on all the treasury bills that US is due that year, or is that something else?
It's
No,
principal plus coupon.
they usually don't pay back debt. They roll the debt. So
Refinance. Yeah.
they borrow new money to pay the old money.
Yeah, that I get, but it's this number, this money only, right? The all the treasuries that 10-year, 5-year, 2-year that are due in that year, plus the
Hmm.
coupon. Is it that
Yeah.
number? Okay.
No,
Yeah. Yeah.
the last 3 years, the issue is that last 3 years, Ellen financed most of the like she issued debts mostly in the front end of the curve. She was mostly financing with 1 year, 2 year, 3 years kind of tenure. She didn't go out into the curve and she didn't issue a lot of 10-year or 30 years notes. So that is the issue why now a huge chunk of US's debt is due for renewal in 2025 and 2026. So, like ideally they want to term out the debt. So the ideal case is that if there is good demand for the 10-year and 30 years debt, they'll definitely roll it, but definitely not at 4.5% or 4.8%. That's why they want to bring it somewhere between 2 and 3. That is something that they can manage. I have shared my screen, and you can see the yield curve in my screen. So you can see the 30-year is somewhere close to 4.8%, and 10-year is somewhere close to 4.5%. And you can see it's kind of a, hockey stick kind of shape, you can see. So that is because right now there is very high demand for short-term uh, notes, not treasuries. So people want more like 3 month, 4 month, 1 year, 2 year, and they want very less of 2 years and 3 years, and they want even less of 10 years and 30 years. So that is a problem, right? So the most
Yeah.
demand is for 2 years and 3 years, while as you move out of the curve, that the demand reduces.
Yeah, hi, I'm on this side. So, in general, yield curve captures the supply demand of it, in terms of yields across. And just an example would be that in current scenario, if China heavily sells, so China is currently seated on a lot of US Treasury. Let's call it 10-year only. Let's say China sells a lot of US Treasury, the price, it goes down, but the yield goes up, right? So the last current, the last week's movement of 3.8 to 4.2 highlights that a lot of US Treasury being sold. Also, when there's a crisis building up, people buy Treasury because it's considered safe haven. Then that's when Treasury goes down. Treasury yield goes down. So it's entirely supply demand driven, and and there are a lot of corporates out there who goes and buy or sell this basis their requirement. A lot of hedging happens using this. So rather just drawing parallels, you should rather focus on in your country, in India, the way 10-year treasury being used, it's similar way across it's being used. Inflation does play a role. That's not the only factor which goes in there. Yeah.
Thanks, Aman.
Yeah, right.
One quick point, I think. So Bala mentioned that the demand for all of them is going down, right? It's not just like long-term treasuries, but just to reiterate, I think as the tenure increases, the demand is further reducing, right?
Yeah, right.
Okay. Okay. And this is like signs of systemic damage, right? This is like sign of less and less trust over increasing time period.
Yeah, you should also look this along with the rise in gold and Bitcoin's price. So, uh, as Aman said, um, during crisis, there will be a rush to treasuries. So that is what have been happening for the past 40, 50 years. But since COVID, uh, there is the secular shift in the way that people allocate uh, or people treat gold and treasuries. So people are increasingly allocating more towards gold as a safe haven and Bitcoin as a safe haven. That's why you can see the secular rise in their price.
Yeah. Yeah, I think I also read and would love for all of you to expound on it that so this is like the fourth turning in the cycle, right? Of the if you're familiar with the concept of fourth turning, sorry. And I think I remember like 1 or 2 weeks ago, markets there was like analysis on how the stock market is decoupling from Bitcoin. And gold has historically been doing good in times of crisis, but this is probably the first cycle that we are seeing Bitcoin also outperform and like be less volatile than the stock market. Yeah, does that make
Yeah,
sense?
S&P 500's volatility reached up to Bitcoin's level.
Right. Yeah, interesting times.
Yeah. So Bala, as I can see currently, I think we are in a yield curve inversion also, because 1 month yield is 4.36, 3 month is 4.34, 6 month is
Yeah, yeah.
4.17. So yeah, we are also
It
in
was, it was
yield
far
curve.
worse some time ago. Now it has sort of somewhat flattened.
Okay.
Yeah.
So I think Saurabh, your question was like the $6 trillion which they need to refinance. What is the total amount? So yeah, I think it's principal plus the coupon payment.
Got it. Got it.
So
I
yeah,
think we can if it's okay, we can move to the Bitbond part of it. Otherwise, we will miss out on that.
yeah. So let's come to Bitbonds, Bitcoin enhanced treasury bonds, an idea whose time has come. So this thing is proposed by Andrew Horns and Matthew Pines. So I have, I mean, this document is pretty huge. So going through each and every line would not make sense. So I have made an mind map. So we can go through that. So my mind map is visible, right?
Yes.
Yeah. So Bitcoin enhanced treasury bonds. So what is the current fiscal challenge? Current fiscal challenge is 9 trillion debt maturing in 12 months, 14 trillion debt maturing in 3 years, rising interest rates 4.5%, increased debt service cost. So because of this rising interest rates, debt service cost increases, constrained fiscal flexibility, and limited economic growth potential. So yeah, these are current I mean challenges or problems which US is facing. So I will show you a chart where, yeah, this one. So this shows like um, how much they have to, how much US has to refinance in 2025 and 2026. So because as Bala was telling, like Ellen did some things wherein she raised money through short-term bonds. So this created a problem for Trump, and they have to refinance 9 trillion of it in this year, and next 7.5 trillion in. I mean, some coupon securities mature over next 3 years. Okay, so 2026, 27, 2027, and 2028. So yeah, so this is the this is the chart, and we will go to the next Bitbonds framework. So Bitcoin enhanced treasury bonds. So how are they structured? Like 90% proceeds go to government funding and 10% proceeds go to Bitcoin acquisition. So this 10% goes to strategic Bitcoin reserve, what Trump has signed basically. Like he wants uh, some strategic Bitcoin reserves to be built. So this 10% will go in here, and the thing for Bitbond is like they will issue it at 1% compared to what they are able to raise at currently at 4.5%. So it will be like Bitcoin linked payment at maturity. Principal will be fully protected by US government's credit. So yeah, investor return will be interest plus Bitcoin upside, and government retains portion of BTC gains. So one more figure is here to explain it better. So yeah, here's an example given wherein US government plans to raise 2 trillion, of which 10% goes to Bitcoin, $200 billion. So I mean the assumption is they are assuming like they might be able to buy 2.2 million Bitcoin at $90,000. However, this will not be the case. But yeah, for assumption yeah, for calculation purposes, they are making this
Yeah.
assumption.
A quick question. Are you saying that because this will increase the price just because of the
Yeah,
increased demand and this news?
yeah.
Right. Right.
Like 2.2 million Bitcoin buying
Yeah.
from government will be crazy times.
Right. Right.
Yeah. How Bitbonds work. So here's one more graphic which says like 90% of the funds goes to US government funding and 10% buys Bitcoin. So yeah, $100 issued, $10 buys in Bitcoin, satisfies funding needs for government activities while adding Bitcoin to strategic Bitcoin reserve. And so how they are structuring is it like currently as we have seen the yield is around 4.5%. So whatever Bitcoin upside, whatever like Bitcoin will go up for sure in 10%, in 10 years, sorry. So up to 4.5%, whatever gain will be there from Bitcoin's upside, that will go to the bond, the treasury holders, and from like they fulfill the 4.5% return, then after there will be a split wherein 50% will be taken by US, 50% of the upside will be taken by US government, and 50% will be given to the treasury buyers. So this is basically the thing, like how it's structured and all. Yeah. So
So
we
the
will go
settlement
ahead.
will be all in USD, right?
Yeah, yeah. Settlement will be all in USD. They will not give you Bitcoin. They will just refinance it again.
Yeah.
Yeah. So let's go to objectives. Objectives are reduced interest burden. Like as I mentioned, the new Bitcoin bonds interest yield will be 1%. So this will significantly reduce the interest cost and expand strategic Bitcoin reserve at no taxpayer cost. So this is good for Trump to advertise in. Like we are not raising taxes, but we are buying Bitcoin. Something he has called. I mean, there's a way he mentioned it. I am not remembering the word right now. Um, like
This
it's
tax
something like,
neutral way of raising
yeah, yeah,
funds or
something
something.
neutral way.
Ah,
Yeah, right.
Budget neutral.
Budget
yes,
neutral.
budget neutral. Yeah,
Budget
correct.
neutral. So this enables them budget neutral way to build their strategic Bitcoin reserve. And the next thing is for investors like tax advantage savings vehicle. So as we know, like bonds coupons which we receive are taxed at our tax slab rates. Even in the US, I think the tax structure is similar. So these bid bonds will be taxed advantage, and uh, they will be basically tax free. So there are muni bonds or muni bonds, which are municipal bonds basically. So they are currently at a tax advantage situation in the US. So bid bonds will be pretty similar to that. And the fourth point is a pathway to defease federal debt. So yeah. So
The tax advantage
one,
savings debt is the status that government gives to the bond, right? It's not
yeah,
so. And the current treasury that the treasury investors, they do not get that status on the debt.
no. They have to pay at their slab rates. Like
So
if
why?
100, yeah,
So why should US government put this in tax savings as a tax saving instrument? Like, what is the advantage there?
people
Because
will buy it because there is no tax on coupon received.
okay,
Like currently, if you buy normal treasury bond, and if you get 4.5%, for $100 you are getting $4.5, and if you are taxed at 30%, 30% goes to the US government again.
But
So
then,
this will not be
but then
in
is
the
it
case of
not
Bitcoin
neutral?
bonds.
Because they're losing out on taxes. As a normal treasury buyer, I pay taxes on the coupon. But if I'm
Yeah,
investing in Bitbonds, then I'm not
yeah.
paying the taxes. So is it budget neutral in that case, or is the tax so small that it's okay?
I mean, good point.
No,
I mean,
the other side is that I'm lending you money for a very lesser rate when compared to the actual
hmm,
4.5%. I'm willing to
yeah,
lend
yeah.
you at 1% only.
Hmm.
1%, and then there will be 4.5%, up to 4.5% gain on Bitcoin appreciation. So if there would have been taxes, then that appreciation could have also been taxed. And there's an upside up to 50% on top of it. So all
Yeah,
that is tax free basically, you were saying.
all that is tax free. I think yes. So we will. I mean,
Maybe just the first percent, 1% is tax free. Everything else could be taxed. But yeah, these could be, I'm asking maybe very specific questions.
in contrast, Bitbonds at 1% would cost only. No, this is cost benefit analysis. I think in the further part, there we might find it. But yeah, we can ask Notebook LM after this this question.
This is just a proposal by Bitcoin Policy Institute. They are
Yeah,
like a think tank. They have floated it. I don't know if even when the US government adopts it, they might definitely change some parts of it.
yeah. So I was explaining the figure 5. So US 10-year currently, I mean, the annual interest cost is around 90 billion. So if bit bonds are introduced, there will be $70 billion of savings, which will, I mean, the US government will save around 70 billion each year. So this is the 10-year savings will be around $700 billion. So this is a good case for them to issue bid bonds. And if there's a demand, then this is a great deal for them. So yeah, nominal savings will be 700 billion in 10 years. Present value of 700 billion will be 554 billion. So Bitcoin purchase will be 200 billion, and next net taxpayer savings would be around 354 billion. So here they have mentioned net taxpayer savings. So what is this? The net taxpayer savings amount to 354.4 billion in present value terms. Even if Bitcoin price remains static, these savings begin immediately upon issuance and continue throughout the term of the bonds, providing substantial fiscal relief to fund critical government programs or reduce additional borrowing needs. So this is more of a government side of a thing, and not what.
Right. And this is assuming that the price stays 90K, right? I think that was the what was the price assumed?
That's the Bitcoin's price as,
Yeah,
but
that is
after,
material. That is not like
yeah,
relevant.
yeah, that is not
Uh,
relevant here. I mean, after they, for example, if they raised 2 trillion at $90,000, then after it doesn't matter what Bitcoin price is to the US government. But after 10 years, if it goes down or if it goes up, then what like 50% upside will be distributed.
Okay.
Okay.
What is confusing me is that so the 70 billion savings is I mean is it on the basis of Bitcoin price being static? I mean
No,
how
no.
are we
Like
calculating it?
see here,
Savings
like
is based.
US 10-year treasury is 4.5%. For
Hmm.
every $100 you are paying, US government is paying $4.5. In case
Right.
of Bitcoin bonds, US government will pay only $1. So this $70 billion is basically this difference.
Oh, okay. Oh, right. Okay. Sorry. Sorry. Yes.
Yeah.
Makes sense. Understood. Understood. And why is this proposal lucrative? Like, if I am the government, why am I incentivized to like issue a like much less yield resulting bond just because it's a Bitcoin bond? Why are we proposing much lesser yield?
No. Like it's saving US government 70 billion every year.
No, but for
And
that it
the
has no, but
and the
I mean,
expectation is that people based upon micro strategies, convertible notes, and the market's demand for Bitcoin backed instruments, they have come to a conclusion that 1% is more than enough, and this itself will be subscribed. Be huge demand for this.
okay. And okay. So there is no specific expectation of Bitcoin price going up to any certain amount. It's just that it's expected to grow, and that's reason enough for the Bitcoin bond rate to be 1%. Is that correct?
Yes.
Yeah.
Okay. Okay.
Yeah.
Okay. Thanks.
So because 50% upside after 4.5%, it will be given to bondholders. So bondholders are incentivized to hold Bitcoin bonds as compared to the current
Ah,
10-year treasuries.
okay.
So it is also like similar to convertible bond. So after 4.5%, you will get the upside exposure, something like that.
Right.
Yeah. So this thing is the next point. So next, fiscal benefits. So yeah, here basic thing like I explained this right now, 70 billion in annual interest savings, 700 billion in nominal. Yeah, I will go to the next point. Yeah, here he has added one more interesting point like debt reduction through asset appreciation. So this is basically what will happen because Bitcoin's price will rise. Debt reduction will happen because of asset appreciation. Potential for significant strategic Bitcoin reserve model. Yeah, so this is a point wherein they can implement their Bitcoin reserve. Tax advantages. So yeah, tax exempt interest payments, tax exempt Bitcoin linked gains. So yeah, Saurabh, your question is answered. Attractive savings vehicle for Americans. So let us go back to
Got it.
yeah. So this is a scenario wherein let me see like next thing security of US government potential Bitcoin upside attracts institutional investors and diversification of fund. So this is a case wherein they have assumed some they have taken some random numbers like what will happen if Bitcoin CAGR goes at 30% or 37%, 53%, and 81% and 123%. So I think 37% is pretty reasonable in 10 years. So yeah, US bonds dramatically lower 10-year rates, substantially reduce interest expense and revenue neutral to revenue positive growth of SBR. So total BTC will be around 2.76 trillion. If Bitcoin grows at 30%, then the value of current Bitcoin, which they would have bought around 2.2 million, if I'm not wrong. Yeah, 2.22 million. This value will go to 2.76 trillion in 10 years. So government's upside will be 0.83 trillion. So 0.83 trillion will be, just good for government. Like uh, we have done nothing extra and we have earned 830 billion by just investing in Bitcoin. The next case is 37%, wherein total Bitcoin value grows to at 4.65 trillion and government's upside is 1.7 trillion. So yeah, these cases, if somebody is hugely heavily bullish, then these cases make sense. But yeah, I think 37% is pretty reasonable to assume. Extending to horizon of 20 years at 36.62% CAGR, the US BTC Treasury upside of the Bitbonds can defease as much as 50.8 trillion of federal debt in 2045. So, if I'm not wrong, what is current US debt? It's around 36 trillion. Bala, if I'm not wrong, are you aware of current debt?
Yeah, I think so. And I remember like there's something called unfunded liabilities, which somehow
Liabilities, yeah.
increase it to 125 trillion. I think yeah, these are the two metrics. So public debt is 36 trillion, and including unfunded liability, that's 125 trillion. Round the number.
Okay. So the point which wherein in the defease, I read something here. Yeah, pathway to defease federal debt. So this is basically how Bitcoin is defeasing federal debt. Like Bitcoin's value will be 50.8 trillion, and in 20 years growing at 7 to 8%. I mean, what would that number be? Around if we go by 6%, 6% will be around 12. It will double in 12 years. So 36 will be doubled. 36 will become 72. So yeah, 50.8 trillion uh, and 72. And it will go around, I think, 100 trillion. Like if this fiat bubble grows, I mean, if we don't move to Bitcoin standard till in the 20 years, and assuming that US government will be around 100 trillion of debt, and out of that 100 trillion, 50 trillion, I mean, Bitcoin will cover 50 trillion. So yeah, they might
And
not
is this
be.
yeah,
Yeah,
and is this assuming 10% allocation?
yeah, this is
Oh
assuming
wow.
10%.
Okay,
Yeah,
interesting. Right. Yeah. Yeah, just one crazy point. I think this is the kind of information which makes me think like the whole conspiracy around that Bitcoin was introduced by CIA to like propel the US dollar system as much as they can because like the Chinese is not, I mean, Chinese is threatening the US dollar system, and the only thing that can redeem US dollar is Bitcoin, interestingly.
yeah. So what's the conclusion, Shreyan? I mean, have you reached to conclusion?
No, I don't know. Okay.
Okay.
Anyone can use this. It's just that US seems to be the first one to use this.
US is leading.
Yeah.
And yeah, and they have and they can, because these bonds are structured in a way so that they pay only, they don't give you bitcoins, they pay you only dollars. They can always print the dollars, so no problem for them.
Yeah.
Right.
So yeah, we have covered the tax thing, and we will go to investor benefits and demand. Security of US government bonds. So this thing tells is like if something bad happens, like if there's quantum hack, Bitcoin will go down, but still, I mean, US government will have their credit if it remains. Yeah. So this is the point. Potential Bitcoin upside 50%, which they talk in the PDF, attracts institutional investors. So yeah, this will attract institutions. Diversification for foreign investors. Yeah, this makes sense. I mean, foreign investor also can diversify, like countries like UAE or Saudi Arabia, who are forced to keep their money in US Treasuries. They can buy Bitbonds from US. So yeah, this might make sense for them also. Accessible for retail investors. So this is one more point. What's the next thing here? Tax advantages. Okay. So yeah, here they have calculated from a investor point of view. So what will be the tax advantages for American households? Tax-free income, tax-free gains. 132 million American households, $3,025 invested per household. So this is the metric which they are using for calculating this. Bitcoin CAGR again 30%, 37%, 53%, etc. Interest plus BTC upside per $100 bond. Okay, so this is interesting. So when you invest $100 and if Bitcoin grows 30%, so at the maturity you will get $96 and total interest plus upside. Okay, so this is a interest plus Bitcoin's upside component. So it will be around 96.58. I mean, you can take this as interest component and total return, like your $100 will be also returned, and 100 plus 96.58 comes down to 196.58, and investor CAGR will be 6.99. So it will be greater than what's currently is there. Like currently, if you invest in US Treasuries, it's 4.5. So it makes sense for retail guys also. So yeah, you will make 7% if Bitcoin grows at a 30% CAGR. At 37%, it will be much nicer. We will have a CAGR of around 9.33%. Okay, this makes sense for retails also. So this figure is going into international and domestic market depth. So 20% purchased by US household 400 billion, and 80% purchased by institutional and foreign investors. So US Bitbonds, new savings for American families, tax-free, income tax-free gains. Treasury market greater than 30 trillion outstanding, 5 trillion to 7 trillion annual issuance. Investor appeal Bitbonds can serve as a eligible collateral tax advantages drive domestic demand. Okay, so this is saying that it will drive domestic demands for Bitbonds. So this is coming into risks. Where is risks? Yeah, risk is here. So we will cover this thing first. Bitbonds are win-win-win. So it is a win for retail. It's a win for institutional investors. It's a win for US government, because US government will save in $700 billion in 10 years. Present value of 554 billion. Bitbonds can produce a significant reduction on interest expense while funding up to 20% of 2025 federal financing needs. Upside 830 billion to 304 trillion, 10 to 98th percentile. Okay, so this is assuming, I think, 120 something percent CAGR. Yeah, this thing. So if Bitcoin grows by 123%, the value of Bitcoin will be around 608 trillion in 10 years. And government's upside will be around 303 trillion. So this is crazy. Yeah. Debt offset. BTC diffuses federal debt at 36% CAGR. At 25 percentile CAGR, the United States share Bitcoin gains can offset $51 trillion of expected federal debt in 2045. So yeah, this point makes sense, which we discussed earlier. Family wealth, tax advantages, savings builder. Americans can purchase Bitbonds on tax-free basis, generating attractive investment gains while investing in America's future. Win-win-win. Huge potential benefits to energize US. Bitbonds are win-win-win. Lower interest rates on revenue positive growth of US strategy Bitcoin reserve and exceptional tax advantage returns for US investors. So this is revenue positive. So did you get this point? Because Bitcoin's price appreciation is happening due to this. I mean, they are claiming it to be a revenue positive growth for US Bitcoin US for the US government. So yeah, this is a great point. Like US revenue positive growth. So risks and implementations and considerations. Is there a chart? No chart. So, okay. So what are risks in these bid bonds? So market and price risk, Bitcoin volatility. So Bitcoin volatility. This is they will mitigate risk by investing only 10% in Bitcoin and 90% will go into uh, US government funding their government. One more is principal protection. So principal protection is guaranteed by US government. Interest savings offset losses and long-term holding horizon. So volatility will be offset by long-term holding. Like in 10 year, you can assume that Bitcoin will not go down. Yeah. Market execution risk. So this is the point wherein which I was explaining. Like price will not be $90,000 if US government starts buying $200 billion worth of Bitcoin. So how will they execute this? They will dollar cost average like Sailor. They can go through OTC desks, and multiple acquisition channels. Whatever they do, I don't think. I mean, this race will be.
Yeah,
Uh,
whatever they do, I don't think they can
yeah,
stop the
because
the
200 billion is
moment
a lot.
something is announced.
Yeah,
Yeah, the moment something is announced, it will start to run.
they will go crazy. Operational and security risk. So this is basically the custody risk. So this will be solved by multi-sig and cold storage and regular security audits. It should be more regular than Fort Knox audits, hopefully. Regulatory and legal considerations. Pilot program under existing authority. Seek explicit legislative authorization. Coordination with regulatory agencies. International and public perception. So yeah, I think there's no chart here in the risk section. So this is a implementation roadmap. So you guys can read it. Uh, you should read it. We are currently out of time, so I will go to the next point. Implementation roadmap. Okay. Pilot program 3 to 6 months. Policy development and expansion 6 to 12 months. Full implementation in 12 to 24 months. So I will tell you what's happening. Like in pilot program, out of the 2 trillion, they will issue some small amount. Like here, I think here they have given some small amount. Yeah, $5 to $10 billion. Like they will test the market here by issuing $5 to $10 billion. So I think this step only will, move the Bitcoin price. Even the pilot program is able to move the Bitcoin's price. So next 6 to 12 months will be policy building and how they will do. Next step will be to raise around 100 to 200 billion, and the last step will be full implementation. So this is a next 1 to 2 year thing. So even if we assume conservatively, this will go to 3 to 4 years. So it will be around 2029. So yeah,
Um,
I
right
think
now,
I just
yeah. Go
yeah,
on,
go
Bala.
ahead, Bala.
yeah, yeah. Right now, there is also like this is the time schedule for US government issue treasury. But already, I think there are private entities that are floating this similar kind of structures. I think there is one Tourmeister. I think I don't get his name in Twitter. So he has floated a vehicle for uh, for the corporates to uh, bring in similar kind of scheme.
Okay. Even Pierre Rochard launched this company, Bitcoin bonds or something similar to that.
Yeah. Correct. I think it's Pierre
Yeah,
Rochard. I got mixed up.
yeah, yeah. Bitcoin bonds company. Yeah, something like that.
Yeah. Yes.
So next point is strategic benefits beyond fiscal impact. Economic
Uh,
competitiveness.
Digant,
Yeah,
just one point that I think I want to mention. So Alok and I also had this chat in the chat on the lounge chat. Sorry. So yeah, my point was that the tax benefits primarily come from Bitcoin bond usage, and I'm pretty sure that Bitcoin bond usage, even by institutions, wouldn't allow self custody or like non-custodian use of Bitcoin, right? So the whatever tax benefits are introduced will be because you are using it within the system or as an asset, right? Not as in current, not bit, using Bitcoin as a currency. Is that a fair
yeah,
assumption? Okay,
yeah. You have to
right.
be in dollars, not in Bitcoin.
Right.
Yeah. So what did you mention? Like you want this mind map in the chat, right?
Yes. So we were having a chat in the lounge chat about like how this is creating a risk for Bitcoin ecosystem as a systemic risk because Bitcoin being used as a asset and being leveraged, using that leverage to like create more and more government intervention into Bitcoin creates a systemic risk that it does create legitimacy for Bitcoin, the asset, but it creates a risk for Bitcoin, the currency. And if Bitcoin wins as an asset, it's not really a win, right? Because gold is already an asset which is doing a good job as an asset. But gold could never be currency, and that's the only reason that we need Bitcoin. Yeah.
Yeah. So yeah, I mean, I have not gone deeper into the rabbit hole of paper bitcoins. So I have to, but I see the way forward here. I mean, this will happen eventually. There's no way for governments to keep running this system without adoption of Bitcoin. So
Yeah.
there
I mean,
should be a
yeah.
there should be a hack from North Korea, and the, like, and then people will again go to Bitcoin. So something similar should happen if we want direct Bitcoin and don't want
Right.
to fund governments and make big bonds. But
Think
in the next 10, 20 years, I see this is the only way for.
Yeah.
Yeah.
I
Yeah.
think
This
the
is a very
paper
extended discussion. Yeah, Mol, sorry.
paper
Go ahead.
paper paper Bitcoin argument like it does not hold here because the government while issuing the bond they are mentioning that 10% will go into buying of Bitcoin of the total bond issuance. So they will have to buy that Bitcoin. If they're not buying the Bitcoin and just saying that they have bought the Bitcoin and there are no actual Bitcoin in the possession, then they are effectively short Bitcoin. So if the price increases to 25%, 30%, then how will they come up with the Bitcoin at that point of time to sell in the market? So this is not case of paper Bitcoin.
Mm.
Yeah. Yeah.
So I think of one parallel. We tried to do the same thing with sovereign gold bonds, but it
Mm.
blew up in our face.
Yeah. Correct.
So I'm just thinking, how is it different from sovereign gold bond? We
I
didn't. I
think
think we didn't buy
US.
the gold, so we thought gold will go down, and we can.
Yeah. So I think how El Salvador is doing, like they have made their Bitcoin reserve public. So US should go down that path. So this will, I mean, this will remove the talks of paper Bitcoin. which could not be done with gold.
Yeah, and India's sovereign bond should be an example for them.
Yeah,
Sovereign gold bond.
they have their own example. I don't know how much gold they have in Fort Knox.
I think the biggest, like the biggest protection against paper Bitcoin is distrust between governments. So as we see, like the game theory of government adoption of Bitcoin play out, more and more governments will require settlement on chain, and once that happens, they are forced to play by the rules of Bitcoin in a way. So I think that's the biggest protection against like adoption of paper Bitcoin becoming mainstream. Because more and more governments will like not want to like use paper Bitcoin by some other government.
Yeah. And I think, I mean, these ETFs and government adopting Bitcoin, this will push Bitcoin's adoption. I mean, you can't tell, like Shreyan, we had the chat about, I wanted to, I mean, how would we, uh, how would we solve the problem of Bharat adopting Bitcoin? I mean, we had the chat around this.
Yes,
So,
yes.
how will a guy in the village will buy Bitcoin? I mean,
Right,
it's pretty hard to explain him about self custody and so,
right.
but it
I
will
think
be easy to
huh,
explain him. Just go to Upstocks or Zerodha and buy Bitcoin ETF. So
right, right,
everyone is not as tech. Everyone is not a tech guy. Basically,
right.
how Bitcoiners, like, how should we tackle this problem? Is like,
Hmm.
we should see Bitcoin in self custody as an apex asset, and then
Yeah.
after everything comes below that, like
Yes.
MSTR and Bitcoin ETFs and everything comes below that. So our main focus should be on Bitcoin in self custody. So first we will introduce him in the Bitcoin ETF and then take him through the self custodial journey.
Yeah, I think like startups like Lava is focusing on that. So making self-custody Bitcoin the index of the new financial system which is being built on Bitcoin. So I don't have like a clear picture of how that looks like, especially for a country like India. But I think like even generally for human societies, it's always the 1% which like dictates the narrative. So currently in the US, it's a challenge. So I can't imagine it happening in the next 1 year or 2 year in India. But once like we are seeing more and more awareness of self custody. Like Donald Trump did not make the speech on Bitcoin 2024 about never sell your Bitcoin and I'll keep Elizabeth Warren and her goons away from your Bitcoin because she was threatening like non-custodial use of Bitcoin. So he did not say it because he genuinely understands Bitcoin ethos. He said it because there was enough demand for it to be said during the Bitcoin conference. So it's always going to be a political thing. I think more and more people need to realize it. Thankfully, US in 16 years of Bitcoin has come to a point where there is enough people who are like in the political sphere of demanding it. So in India, it's going to take time. I think it's going to take people like all of us who understand Bitcoin ethos to like push it. I'm optimistic. I don't know how long it will take, but yeah, I don't imagine like paper Bitcoin becoming mainstream even in India, like over the long term at least.
Yeah, maybe in 2029.
Yeah.
So yeah, the last 2 points are strategic benefits beyond fiscal impact, economic competitiveness and innovation leadership, financial inclusion and household savings, strategic positioning and global leadership, intergenerational equity and long-term fiscal health. So this is basically summarizing the benefits of Bitcoin bonds for US government. And the last point is a strategic Bitcoin Reserve Executive Order established by President Trump on 6 March 2025. Bitcoin as a strategic reserve as a digital gold, budget neutral acquisition strategy, and Bitbonds as direct implementation. Okay, let me see if I have anything to show. Yeah, okay. So I have finished. Uh, Jatin, you